if you're either maybe thinking of starting a business or you have a side hustle that maybe evolved into something more than you thought it would, we're going to teach you today in 4 steps the best things you can do to establish organization and just start your business in the best possible way. So I'm Jessica with Facts, Figures, and Fallacies from the Frontline podcast, and I'm here with Nick and Mitzi, also experts in this field. So today I'm just going to start with number 1, choose a business structure. So the 4 main ones that you're probably going to choose from as a startup is a sole proprietorship, a partnership, a limited liability company or LLC, and an S Corp. And so to elaborate a little bit more on those, a sole proprietorship is typically what you are kind of automatically. If you started something on Etsy or you got into TikTok and TikTok started paying you money, you're probably a sole proprietorship. You can operate under your legal name and your social security number, and it's just an extra schedule on your tax return. There's no, you're liable personally for anything that happens. There's no kind of protection legally to a sole prop. So that's typically the most common for anyone just getting out of the gate. And next is a partnership. Maybe you got together with a friend or a brother or sister or dad and was like, hey, do you want to go into this 50-50? You don't need a legal operating document to establish a partnership. You may have literally just said that, hey, let's go in 50-50. You are now a partnership. You have to file a partnership tax return, so that's an additional expense to your business you may not have considered when you did that handshake deal. So that's a very common one that we see people coming to us after the fact. And then limited liability companies. This is typically what we recommend for startups. Again, depending on your situation, this helps separate business and personal. So your business assets, business liabilities, all of that stays within the business. And then lastly, I'll mention the S Corp, which is really more of a tax strategy than anything. We typically recommend that you elect an S Corp if you have a certain amount of income over a threshold. But until you have that amount of income, it may not make sense for you to have an S Corp election.
Yeah, and I'd love to add into this conversation, when it comes to business entity formation, we absolutely recommend talking to someone, whether that be a CPA or an attorney, before you just go on LegalZoom and set something up. Because it really is different depending on your situation. You know, if you're trying to invest in real estate, we don't want you setting up an S Corp for that. But if you are, you know, making a certain amount of money in an active business, then yes, the S Corp will most likely make a lot of sense for you. Right. So it's just super important to get professional advice before you just set something up randomly. Right. You know, if you set up an LLC and you don't file that S election to become an S Corp, well, it's possible that once you start making some money, you're going to be paying in way more tax than you need to be. And then on the flip side of that, if you are a sole prop and you just don't want to set up any kind of entity, well, if you get sued, maybe somebody can, you know, take your personal assets. So there's just a lot that goes into this, and we highly recommend talking to a professional once your business, you know, when you're setting up a business or when you see that it's going to potentially take off. Right.
And a lot of LLCs, I see ads for them all the time because I'm an accountant and, you know, they flash on YouTube, set up your LLC. It takes 20 minutes. Well, maybe that includes filing with the Secretary of State. Maybe they produce an operating agreement, but they may not produce all of the legal documents it requires to truly set up an LLC, which when the time comes, hopefully it never will, but if the time comes, they're going to question, hey, where's this document? Where's your first meeting minutes? Where's your operating agreement? You're saying you have these owners, but actually your operating agreement says this, so where's your amendment?
Yeah, and you know what we see a lot actually is somebody will set up an LLC, and when they're filing with the IRS for their tax ID number, they'll select that it's a partnership. And maybe it's a husband and wife, and in the state of Texas, you might be able to instead set up a single member LLC so that it's a disregarded entity and you don't have to file 2 tax returns. You only have to file your 1040 with your spouse jointly. But if you have a partnership LLC selected with your tax ID number, well, then the IRS is expecting you to file a 1065 partnership tax return each year. And so that's another reason why you really want to know what you're doing and not just try to save a couple $100 and go on LegalZoom and do this yourself.
Right. And when you have that extra tax return, that also means extra record keeping, which means either you're going to be doing more work or you're going to be paying your CPA to do more work. So it's going to cost you more money in the long run. So you may want to get with someone and set it up correctly right off the bat to save yourself.
And also as a state implication to that. So if you set up an LLC, you'll have, say for the state of Texas, then you've got a franchise tax filing responsibility. That's also something we see all the time. People will set up an LLC. Maybe they'll set up 2 or 3 LLCs. All of them are inactive. All of them have been forfeited. So
they don't even make it. They make it a year or not even a year, and all 3 of their LLCs are inactive with state of Texas, meaning you've lost all of your liability protection because you didn't file these 3 reports that you need to for each LLC.
Those 3 reports are just Texas franchise tax returns. They're not that difficult. They just need to be done.
Yes, they're not difficult, assuming that you make less than the threshold, which is around 1.1 million in sales revenue. If you're below that threshold, it's just an information report. There's no tax due to the state of Texas in this example. But you do have to file that on time. Otherwise, your LLC is forfeited and you have to go through a process to get that reinstated with the state.
Right. And we've done that for multiple clients. Or they come to us and they're getting these letters saying, your franchise tax is ended, it's been revoked, and we either have to reinstate it or file a late report, depending on how far behind they are.
Right.
Okay, now that you've chosen your entity structure, the next step is, well, first to get all that done. But number 2 is to register your business. If you've decided you're a sole proprietorship, you're just bringing in, $1,000 a year, and you're going to operate as your own name under your social security number, you don't need to register anywhere. However, if you elect any of the other entities, partnership, LLC, or a S Corp, you will need to register with the state. In Texas, you'll register with the Secretary of State. In other states, it may be called something else. That is the next step if you would like to begin conducting business in that state.
And a single business may also want to register in multiple states. So if I'm a Texas LLC and I want to do business in the state of Oklahoma, I also need to register to do business in the state of Oklahoma.
So what if I've registered in Texas, start conducting business in Texas, and then I get a random call from someone from Arkansas wanting my business? Can I then go and register?
Yes.
Right, so you can just register as you go, keep registering in different states. You do have to keep up with that. Once you do, typically the state requires you to have a registered agent in that state, and there are agencies that provide that service for like $50 or $100 a year. Basically just something to have their name connected to your business in that state.
Yeah, and specifically those registered agents, that's actually something that you really need to pay attention to. A lot of people that set up their own LLC on LegalZoom, for example, they just get a random registered agent with LegalZoom. And so anytime maybe the IRS is going to try to, they're going to audit you or someone's trying to correspond with you, that information is being mailed to your registered agent's mailing address oftentimes. And you don't want that to be going into some dark void where you're never going to see it. You need that to be going to someone who's going to get you that letter as soon as they receive it. So that's just another reason why having a registered agent and really taking the time to set that up with a great mailing address is important. And that is a service that we offer as well.
Right, and if you've already set up your registered agent through LegalZoom, we got a couple requests like last week. Hey, can you become my registered agent? And it's a really simple form. You just file a change of registered agent form, and then we or whoever your CPA is that you may want to be a registered agent can become one pretty quickly. Okay, so now that you've registered your business in one or all the applicable states, number 3 is that you open a business bank account. And this also applies to credit cards. So if once you've decided sole prop, partnership, LLC, S Corp, once you get that tax ID, or even if you're just going to maintain the sole proprietorship and maybe get a DBA, doing business as, you can go open a bank account, and this is what we recommend to our clients. Go open a bank account with whatever federal tax ID number you're using for that business. If it's your social, use your social. If it's an EIN, use an EIN. And run nothing through there but your business expenses. And same with the credit card. Open it in the name of that company and run nothing through there but business expenses, so that you can be sure your accountant, whoever, can capture everything throughout the year.
Yeah, and it's super important, especially for LLCs, to have a business bank account set up that is not intermingled with personal expenses, because that having personal expenses flowing through your LLC bank account can actually invalidate the liability protection. And in a sense, it kind of defeats the purpose of having an LLC in the first place, right?
Right.
So that's a big reason why when you set this bank account up, let's keep those personal expenses out. This also makes your life so much easier when you're working on getting your tax return ready, because it'll help you make sure that you're not counting personal expenses as business expenses. And it'll also make it easier to go through your bank statements potentially and, look at all the expenses you've had for the business throughout the year.
Right. And I'd like to just expand on a different point where a lot of people come to us, and this may be you, where you've probably incurred quite a bit of stuff on your personal card, whether it's a consultation with a CPA firm or with a lawyer or the document fee to LegalZoom. Whatever it may be, those are business expenses that are wrapped up in your personal cards. It doesn't mean you can't deduct them on your tax return. So keep track of everything you spent on your personal cards and bank accounts up until this point, and then going forward, you can use those business bank accounts. But you definitely don't want to lose credit for the deductions just because you ran it through a personal card and lost track of it.
Yeah.
And another thing to add is if you have multiple businesses, keep each business separate. And we recommend separate bank accounts for each business. And then even further, and this goes to when you're going through an IRS audit, if you're being audited on one entity and there are transfers back and forth to 10 other entities, that makes it very difficult to keep the IRS focused on this one entity, because now we've opened up a whole can of worms to all these other entities. So if you need to do transfers between accounts, if you can transfer to one entity or one person, if all of the businesses underneath, if you're 100% owner of all those businesses, don't transfer among the businesses, come up to one. So transfer in to yourself or to one entity and out. But don't run, if I'm sitting in an audit with an IRS agent and I'm looking at sales and I've got 30 entities transferring in and out of this entity, I've just opened up all 30 entities to further investigation.
Right.
So,
and we recommend that you transfer to yourself, the owner of all these entities, correct? So that we can call it a draw on one end and a contribution on the other, because that's really what it is. You're just skipping a step whenever you transfer between entities. It makes it harder on your accountant or on you when you're going back and trying to figure out what happened. And again, it would be nicer if the IRS could see all of these transfers going to your personal account. Then it's more obvious that you did a draw, which is truly what happened, even when you're transferring to another entity. So now that you have all your bank accounts organized, number 4 is that we recommend you choose an accounting software. Now, we understand that if you're just a little startup and you have 10 transactions, you still have you're an employee somewhere full-time, and you want to keep track of those in Excel, that's totally fine to do. But if you start introducing a level of complexity and it's getting time-consuming and stressful, you might want to consider something like QuickBooks Online, or there's multiple accounting softwares where you can keep track of things more quickly, reconcile your accounts, just make sure you're not missing anything. Somewhere you can record maybe contribution of your personal assets. Like if I start a business and I dedicate one of my personal trucks completely to that business, that's where I can record that so that my accountant can clearly see what happened and the year that it did happen. So if your business is getting a little complex, we do recommend that you choose an accounting software.
Yeah, and being organized really will save you so much in taxes. I couldn't tell you the number of times we have people who don't have any accounting software set up, and their business has really started to grow, and they're kind of trying to keep their head above water and keep up with their sales and expenses in a spreadsheet or on paper. Sometimes not even either of those two. Instead, they just give you a box of receipts. And a lot of times, they're missing their expenses, a lot of their expenses throughout the year. Whereas if you have, say, QuickBooks Online, you connect your business bank account to QuickBooks Online. And so literally every single business transaction that you have throughout the year is auto imported into this software. And so it really helps make sure that you're not missing any deductions that you had throughout the year.
And also it helps you eliminate Excel spreadsheet mistakes. So we'll have a client come in and bring us an Excel spreadsheet, that is, all the way out to GGFF. And you have one bad formula in there and all of those numbers can be wrong. And we see this a lot with rental properties, where if you would just put it in your accounting software, even if you're using QuickBooks Online, we use that a lot here. Each rental property can be a separate class or a separate location. So we can easily extract that data when we get ready to do your tax return, where if we're trying to work with Excel, it's very, very difficult.
Definitely.
Yeah, and the accounting software also brings up a good point. If you are wanting to hire an employee, this happens a lot. If you're a little business, but you're growing enough to where you can hire someone and you don't know what returns to file, the 941, the 940s, the W-2 at the end of the year. If you sign up with an accounting software, especially cloud software, you can typically get all of that automated to where you're paying into the IRS and you're getting all those things filed, and you stay compliant with little to no effort as long as you pay a subscription fee. Now, that needs to be set up correctly and adjusted anytime there's whatever going on. But that does take a huge stress away. We've done some conversions and gotten people on more automated software, and it just takes a whole section of their life, like it gives that time back to them because they're not trying to figure out how to be a payroll expert just because they have one or two employees.
Yeah, another thing to add on is we see a lot of startup companies pay contractors, but they don't realize that they need to be filing 1099s with the IRS as well. And an accounting software will also help make that process much easier. It'll allow you to keep all that data in one place. And even QuickBooks Online has a great feature where they can help file those 1099s for you each January. So highly recommend setting up an accounting software once you start your business.
Right.
And one thing I'll add, it's a little technicality, but when Jessica said that if you select the QBO payroll, everything is automated, and that's true and it works great, you still have to watch it, make sure it's running smoothly. The big thing that we see that most people don't remember to do is once every year in January, you do have to communicate either to QuickBooks or go in yourself and update your state unemployment tax rate. And if you don't, it'll throw your state unemployment tax off. We see that a lot. And people don't understand why I'm overpaid, why I'm underpaid. It's because you haven't updated your tax rate. That is not automated. I don't know any payroll software system that automates the state unemployment tax rate.
Yeah.
Right. Well, because you're mailed a letter, and so your payroll processor has no way of knowing what that's being updated to. So,
well, and a lot of times they come up with the rate later.
Right.
Like they
That's
may
also
come out
true.
with it in March or April, and it's effective January.
Right.
So
you have to backdate it.
Right. You have to backdate it, and whatever accounting software should factor in that credit that you've been overpaying or underpaying. Now that you've gotten all 4 steps down, our office deals with this all the time. We will set them up from the very beginning. It can be a 1-man setup, 10-man setup, and we get them going and help them grow all the way till they're ready to go public. I have people that they come in and I get them all set up, and they keep track of things on their own with just a little assistance as you go. We have people come in and completely turn everything over to us. It just depends what kind of person you are and how well you stay organized, or if you're not going to stay organized, go ahead and turn it over to someone who can. But Notice I say stay organized a lot because I really mean it. That is so, so, so important up front, just to get that all set up so that you're not bringing a pile of paperwork into someone because you no longer know what's going on. So anyway, I hope this video was helpful. If you would like to know anything else in particular, please comment and subscribe to see our next videos. Thank you.